Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 19th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. We didn't get a whole lot of economic data across the pond other than Great Britain's retail sales came in at negative 0.5%, expected to be a positive 0.1%. They did revise last month's number up by 0.1% to 1.4%. Then back here in the United States, we got Philly Fed Manufacturing Index came in at 25.7, expected to be 21.6. Unemployment claims lower than expected, coming in at 207,000, expected to be 220,000. That's good for the overall economy. We also have Quarles speaking, who is a Fed FOMC governor member. He's going to be a voting member. And then finally, we got natural gas storages came in at 46 billion cubic feet, expected to be 58 billion cubic feet, less than expected. There is bullish for nat gas. And then that's about it for the most part for the overall economic data. Let's move on to the overall markets then. So crude oil kind of getting a little bit of a blip to the upside on that build. Remember, we saw a drawdown of 12 million barrels, and which was about 8 million barrels more than expected. That caused this sell-off, which is completely counterintuitive to what one would think. Then yesterday we got a build of 5 million barrels, and we get a bit of a rally. Today it looks like it's stopping out a little bit. May very well want to just kind of trend sideways here between 65 and 70 for the next few days at least. It just seems like it's kind of calmed down after it's had this sell-off. I think it's going to try and shake everything out. So crude oil, expect to kind of trend sideways. Maybe not necessarily between this 50 Fibonacci, but the 61 extension and the 38, I think, is where it's going to kind of stay. It may break below that just because of this point of control, drawing it like a magnet to get back down here in between this. But if I were going to be selling options or something like that, or trying to play this, I would be looking for it to stay within these two extensions. Gold futures continue to slide. Yesterday it looked like it was really good. Came down to the 38 Fibonacci, bounced off of it, created a nice little bottom. I mean, that is usually the kind of setup where you get any kind of confirmation to the upside. That's where you jump on board. I haven't added anything. I talked about this yesterday. It was looking really good. Decided to wait for a little bit more confirmation. And lo and behold, today it just slammed right through that 38 Fibonacci like it was butter. And I haven't done anything in gold, thankfully, because I would have been playing that to the upside. Going to wait for confirmation. Bitcoin, I have no position in, but up another 150 points today. Yesterday, it looked a little bit toppy. It's being held up by the 50-day moving average, though, right now. That's going to be really important if you're long Bitcoin. But there's just not volume coming into this market anymore. It's kind of like people have forgotten about it. Bonds, moving higher a little bit today, but again, it's in this trend area right where value is. It can't move higher, which is, the way I played it. I played it to the downside, but trending sideways is okay as well, for me anyway. VIX, still in the teens. It actually moved up a little bit today. After yesterday, we were worrying about it going into single digits. All right, today we've gotten a little bit of a move to the upside, which is good. And that is with the Dow Jones Industrial Average off by about 61 points today. I think it's going to stay above this 23 Fibonacci, but it might want to retrace a little bit because that is where the point of control is right now. And NASDAQ is coming off by about 11 points, pretty much unchanged though. These markets can make that up in a matter of minutes. I mean, 5 points down in the E-mini S&Ps, not a big deal. It did get above this 50 Fibonacci level. This is an extension. I didn't change them to yellow. I usually have these in yellow or gold just to differentiate it from the regular Fibonacci. But this is a Fibonacci extension off of a 3-year low to this high, and then this is the retracement that I use to set up this Fibonacci extension. So should act pretty good. Right now we're above that. I'd like to see it stay above that. If we're going to keep moving to the upside, any settlement below this, I'm thinking it's going to look like it wants to roll back over. But we'll have to wait till the end of the day for that. Trending sideways for the most part. Overnight inventory did get short, and you can see they flushed them out right on the open to the upside, try to punch them out, and now trying to regain some of that momentum. We're right below the 50-day move or 50 Fibonacci extension. Like I said, if you're a bull, you'd like to get it above that. Any settlement below here is going to look pretty bearish, like a little bit of topping pattern, if you will. IBM earnings. I didn't play it, of course, to the upside because I've been beaten up the last couple of times on it. Even though they beat on earnings a lot of times, they have been not accepted very well by investors because they're switching from a service-oriented business to cloud-based, and I think that's better for their margins. So I've been championing that. The investors have not liked it so much, but today we are getting a pop in IBM, probably because I didn't sell puts in it, is the way I'm looking at it. Okay, American Express. I played this also to the upside. I think that all of these credit card companies are going to do very well because we have been seeing spending go up, but we have not seen the wages strengthen, the personal wages. So as spending goes up, if wages don't go up, it's usually a signal that people are buying on credit cards. So I've been playing American Express, and I'm going to be playing all of the credit cards to the upside. Also, higher interest rates give them better margins. Anyway, with American Express, I did this in both my margin and in my IRA, but over there in my margin account, I did the July that expire tomorrow, sold the 98 puts for 37 cents. I bought them back in my margin account right off the bat for 18 cents. Over in my IRA, which is defined risk, I was able to cover those same 98 puts for about 16 cents, but I did the whole strategy with the 98, 93 put spread. I had to define that risk with the 93s, which I basically bought for about a couple of pennies, 5 cents or something. So I'm leaving that part of it on, but did cover the other side of it. Like I said, my margin, I think I did it for 18. In my IRA, I did it for 16, and that just had to do with timing. The market was actually rallying as I was trying to get out of those right on the open, which is what I say to do in my webinars for earnings, is that we should cover those almost immediately off the bat, unless it's already a loser, which, I have an example for that for you. The eBay trade. All right, now eBay, I might actually even take possession of take these stocks with me, because in eBay, I went in and sold the puts, the 36 puts in there. What price did I do for that? I did the July 36 puts, I thought I did. Yes, the 36 puts I originally sold for 44 cents. So you can see those are in the money right now. We're trading right around 35. That's $1 in the money, so a nice little loser there that I'm not very happy about. But at the end of the day, if we look at this on a daily chart, you're going to see that that it did find a lot of support right down here, tweezer bottoms. This is in a bearish moving pattern, I agree, but the way that the market's acting, it's really finding some support. They didn't really miss very much, as you can see here, by a couple thousandths of a penny. They missed on their earnings, and they got slammed for it. I think this is an opportunity to get long eBay if you are liking eBay, but because these puts went against me, they're $1 in my face, I'm going to let this ride out. If I have to take the long in eBay at 36, I'll do that, and then I'm just going to start doing short calls against it. If I get up there and I can get a scratch, either today or tomorrow, then that's what I'm going to do as well. But if it's looking like a loser, I'm taking these eBay in with me. All right, that's about it for today. We got a couple earnings coming up. I'm going to be looking at Microsoft. Honeywell and GE has earnings, but I'm going to probably stay away from GE. So Microsoft and Honeywell, I'm going to be playing Microsoft to the upside. Haven't really decided what I'm going to do with Honeywell. Maybe a strangle or something like that, just because I don't have a real directional opinion right now. So keep your eyes out on Twitter for me to post that. All right. Also, today we're going to be doing a ratio call spread. So I'm going to set this up. We're going to increase our risk again. That's what we're doing here in the advanced options. We're kind of stepping up a little bit, increasing our risk, which increases our probabilities of success. And I'll talk about how all of that shakes out in today's webinar. So join us at protraderstrategies.com. If you want to learn how to trade some options, check me out. Let me know. Give me a like or dislike at the bottom of this video. If you give me a like, thank you very much. If you give me a dislike, let me know what it is you didn't like about my video, all right? So that I can make some adjustments and see if I can tailor this a little bit more to what you guys are looking for out there, all right? So, Pro Trader Strategies for the webinar today. And if you can't take that, take it easy.